All right. Greetings to everyone. My name is Edward, and you are welcome to our channel today. Here is pros and cons accountancy tutorials. Surely you can call me Ed also for short. Well, we want to continue with what we started on consolidation, or let me say business combination. Now we've talked about various mechanics. So we are on our third mechanic, which is purchase consideration. And for purchase consideration, our last videos has talked about the cash and deferred consideration. We've also talked about um, the other consideration we talked about was contingent consideration and then the transfer of PPE. So today we want to focus on share exchange and the loan so that we can end the session on our third mechanic, which is the purchase consideration. Right. So let's continue with share exchange and then loan. To begin with, we want to start with share exchange. So the last time we had an introduction on the mechanics, we said for the purchase consideration, we have about 6 types, for which we've done 4 already. So we want to do with the last 2. And we said for the share exchange, I'm purchasing your company, but I want to use the shares in my company to purchase your own, right? I want to use the shares in my company to purchase your own. So if, let's say, I want to purchase 70% of your shares, and the 70% is, let's say, 70,000, I will use shares in my company equivalent to 70,000 and give it to you so that you give me what? That 70% of your shares I want to purchase. So that's the whole idea, right? So if let's say I have 10,000 shares, which is 3 cedis each, and you are having, so let's say Pros is having 10,000 shares at 3 cedi each. And then Cons being the subsidiary or Cons being the company that we want to purchase their shares is having, let's say, 30,000 shares at 1 cedi each. 1 cedi each. What is going to happen? So we want to purchase 30, we want to purchase, let's say, 70%. So percentage that we are going to purchase is, let's say, 70%. Now, the 70% shares that we want to purchase in Cons is going to be 0.7 times 30,000 shares. So that is going to give us 0.7 times 30,000, which is 21,000, right? 21,000 shares. And let's say the fair value of this shares is the agreement on the purchase. Let's say the agreement on the purchase is that we are supposed to pay 2 cedis for each share, right? 2 cedis for each share. So the share price is 2 cedis. So in total, we are going to pay 42,000. 42,000 Ghana cedis for what? To Cons. 42,000 Ghana cedis to Cons. Now we are saying that for share exchange, we will use equivalent of our shares. Cons is going to use equivalent of their shares, which will be equal to what? 42,000. Give it to Cons and take what? The 21,000 shares. And take what? The 21,000 shares. Because we are using equivalent of my shares. So we have to multiply it by the cost price of what? My shares. Right? Now let's deal with this scenario and see. We want to purchase 70,000. We want to purchase 70%. And this 70% is 42,000. How much of your shares will be equal to the 42,000? That's the whole issue. How much of Pros shares will be equal to what? 42,000, right? So if we divide the 42,000 by 3, we are getting 14,000. We are getting 14,000. So let's say Pros shares is about 20,000. 20,000 shares. Good. So how much of your shares will be equal to what? 42,000. How much of your shares will be equal to 42,000? Then we are going to say that, well, the number of shares which will be equal to 42,000, the number of shares in Pros which will be equal to the 42,000 will only be what? 42,000 divided by their 3 CD per share. And that gives 14,000. That gives 14,000. So in that case, it means Pros will have to give shares of what? 14,000 shares to Cons to take what? 70% in Cons. To take 70% in Cons. That is the idea of share exchange. That's the idea of share exchange. But in a scenario form, the question is going to give you in an examination, the question is going to give you the sharing ratio. The sharing what? The sharing ratio. The question is going to give you the sharing what? Ratio. So we are going to have a scenario, deal with it. But basically, this is the understanding of what? Share exchange. This is the understanding of share exchange. How much shares in your company will be equivalent to the percentage you want to purchase in my company? That's all. That's all. So 14,000 shares will be equivalent to what? 21,000 shares. 14,000 shares in Pros will be equivalent 21,000 shares in who? In Cons. That's all. That's the whole idea. Let's have a scenario, deal with this because share exchange is very simple. As I said, for a scenario form or a question form, the sharing ratio will be given to you. So the sharing ratio may be, let's say, 2, every 2 in Cons for every 3 in what? In and every 2 in Pros for 3 in what? Cons. And that one will be given to you as easy as possible. So let's have a scenario. Let's have a scenario. That will make it very easy. So that we use the scenario as well to explain. So let's look at share exchange. The purchase consideration includes a share exchange whereby 3 shares in Pros are exchanged for every 5 shares acquired in Cons. For every 5 shares acquired in Cons. Pros acquired 75% of the 50,000 issued shares of Cons. At the date of acquisition, the market value of shares was what? 5 for Pros and 3 for Cons. 5 for Pros and 3 for Cons. Right. So now with this, what we are going to do is we have been given the sharing ratio. We want to know the number of shares in Pros, which will be equivalent to the shares we want to purchase in Cons. And the sharing ratio has been given to be what? 3:5. So whenever Pros give 3 to Cons, Cons will give what? 5, because 3 in Pros is equal to 5 in Cons. So if Pros give 3 to Cons, Cons will give what? 5 to Pros. Okay. So now let's go to our board and analyze this. Let's go to our board and analyze this. Share exchange. Share exchange. So for share exchange, what we are saying that you should have your exchange ratio. So the exchange ratio here which has been given to us to be 3:5. 3:5. We should know the total shares that Cons is having. So total shares is equal to 50,000 shares, right? 50,000 shares. Percentage to purchase. So the percentage that Pros is purchasing is 75%. 75%. Right. So now shares purchased, shares to purchase is equal to 0.75 times the 50,000 shares that we have in cons. Right. So 0.75 times 50,000 is going to be 37,500. 37,500 shares. Now the question is, how many shares in pros is equivalent to what? This 37,500. And you have been given what? The 3:1 as the ratio. The 3:1 simply means that here is pros, here is cons. So if pros give 3, cons will give 5. So we will do this at the exam hall, or we will do this at the exam hall till here becomes 37,500. Then we will get a total also for pros. Then it means that what pros is given will be here, what cons is given will be here. But you can't do this at an exam hall. No. Exam is giving you 3 hours, and you can, if you joke, you can use about 2 hours to do these things, this thing. So what are you going to do? You just use what? The ratio which has been given to you. 3:5. 3:5. So with this 3:5, it simply means that anytime cons give 5, pros give 3, cons is going to give what? Cons is going to give 5. This will help us to calculate for what? The equivalent of shares in pros, which will be for the 37,500 in cons. So 3/5 multiplied by what? 37,500 is what pros will be given. 37,500 shares. 37,500 shares. Right. So we are saying that shares to transfer is equal to what? 3/5 times 37,500. And then 3 divided by 5 times 37,500 is giving us 22,500 shares. So what does that mean? It means pros is giving out 22,500 shares to acquire 37,500 shares in cons. All what we have been talking about is about shares. What is the amount? What is the amount? What we have to get is that I am the one purchasing your company, and I'm saying that I'll give you some shares in my company to take some from your company. So what price should we use to multiply by what? The 22,500. What will be the consideration? So here, the consideration is going to be what? The shares that Pros is giving out is 22,500. What is the amount of that 22,500? That's your consideration. What is the amount of that 20? Because I am the one. Pros is the one going to purchase a company. And Pros is saying that, okay, let me use my shares and give it to you. Right? So the shares I'm giving out to you, what is the amount? And we have to use how much Pros value each share in its company. We have to multiply that one by the 22,500. This is very simple. Let's not be confused here. I am coming to purchase your company, and I said, let me give you what? This calculator to take the shares. This calculator I'm giving to you, it is the value of the calculator that will be my consideration. Is that not it? The value of the calculator is what will be my consideration. So if I give the calculator to you and the calculator is 10,000, it means I've given you 10,000. That's the idea. Now, the 22,500 shares that Pros is giving out, how much is it in Pros company? How much at all is it in Pros company? The question already told you that the price per share in Pros company is how much? Let's go to the scenario. The price per share in Pros company is 5. It's 5, right? It's 5. So let's multiply the 22,500 by 5, and that becomes our consideration, our share exchange consideration. So our consideration is going to be 22, 500 shares times what? Times 5. Ghana cedi 5. What do we get? That gives us 122,500. 122,500 cedis. So Pros is giving out 22,500 shares, but it is what? 112,500. 100, sorry, 112, yes, 112,500. 112,500. That is share exchange. So share exchange be looking at the rate, the ratio, and always it is the parent ratio over the subsidiary ratio. The parent, the one who is purchasing, their ratio should come first over ours. If don't put in mind that always the company we are purchasing, their ratio will be the highest. No. Here, Pros own could have been 5, and then Cons own 3. Right. So don't put it in mind that always the company we are purchasing, their ratio will be high. No, that's not how it is. So please again, let us not take that in mind. All right, so this is share exchange. This is the whole idea on share exchange, right? Know that the share that the ratio would be, if you multiply the ratio by the number of shares that we are actually purchasing. First, you should know the ratio. You should know the total shares that the company we are purchasing they have and the percentage you want to purchase. So we multiply that percentage by the total shares within the company that we want to purchase, so that we get to know the number of shares that we want to purchase. So it is that number of shares that we are giving out our own to go and take. Right? We are giving out our own to go and take. So we want to find equivalent of shares in our company to that what? To the number of shares that we want to acquire. That is all. And because we are finding the equivalent of shares in my company and we have used the ratio, we have to multiply by my company price, my company cost per share. Right? Price, my company price per share or fair value per share in my company. That is all about share exchange consideration. Now let's look at loan consideration. Loan consideration. Loan consideration. Loan consideration. Loan consideration. So for loan consideration, as I said the last time, it's somehow funny, right? It's somehow funny. Okay, let's get back to our share exchange because you have to. Now, for the share exchange, know that we have purchased some shares, right? We have actually purchased some shares. So when we are doing the consolidation, if we are doing the consolidation, this total shares that we purchase will be added to the parent what? Share. Will be added to the parent what? Shares. Will be added to the parent shares. So we are going to actually credit shares with how much? 112,500. In that case, it simply means that we've added 22,500 shares to the parent what? Shares. So we are going to have, for our shares, we are going to have the parent shares, that amount, the total amount, then we add this to it. And we debit our consideration. 112,500. Debit our consideration. Debit our consideration. This is how the share exchange is going to be recognized. So that's all for share exchange consideration. Share exchange consideration. Let's go to the loan consideration. Loan consideration, as I was explaining the last time, is somehow funny because I'm coming to purchase your company and I said, give it to me on loan. Oh, I'm not doing well. You say you are coming to purchase and give me money. Now you say I should give it to you on loan. That's the whole idea. So this 30 7,500 shares that Pros is purchasing. Pros will say that give it to me on loan. And every 100 that I purchase, every 100 share, I'll take it as loan of what? 1,000 cedis. Right? Take it as loan of 1,000 cedis. So how many thousands do we have in 37,500? Oh, sorry. How many hundreds do we have in 37,500? Multiply by that by 1,000 cedis. That is loan. That is loan. Don't get confused. Now, what we are saying is we have purchased. So shares to purchase is 37,500 shares. And we are saying that give it to us on loan, right? Give it to us on loan. So every 100 shares, every 100 shares will be equal to 1,000 cedi loan, right? 1,000 cedi, let's say 10% loan. 1,000 cedi, 10% loan. Okay. 1,000 cedi, 10% loan. What does that mean? We can say every one share will have its own loan. So it means that we can calculate for loan per share. Loan per share will be equal to 1,000 cedis divided by what? 100 shares. Because remember, 100 shares is equal to what? 1,000 cedi loan. So 1,000 cedis divided by 100 is giving us what? 10 cedi loan. 10 cedi what? Loan. It is giving us 10 cedi loan. Okay. But we want to purchase 37,500. Well, then it means the total loan is equal to. So total loan is equal to 37,500 times what? Times 10 cedis. Times 10 cedis. And that would be equal to 375,000. And it's a loan. So 10% loan. Right? So it is going to be a loan. This is simple about loan. This is very, very simple. Very, very simple. Another way we can deal with this is that it is 37,500 shares, and every 100 is going for 1,000 what? 1,000 loan. So we can say 37,500 shares, 37,500 shares divided by 100 shares times 1,000 cedis. 1,000 cedi, 10% loan. So times 1,000 cedis, right? Let's even take this one out. Times 1,000 cedis. So we have 37,500 divided by 100 times 1,000, which will give us 37,500 divided by 100 multiplied by 1,000 should give us 375,000. 375,000 cedis. So you can deal with it by calculating for loan per share, or you can deal with it by dividing the total shares dividing the total shares by the number of shares to the loan, the number of shares to the loan that they want to give, right? So I don't know. It's very simple for us to deal with. So in recognizing this, we will credit loan of what? 37,500. So 10% loan, right? 10% loan of 375,000, sorry, 375,000. And then debit consideration, we debit consideration with how much? With also 375,000. 375,000. So this will have effect in the financial position, whilst this one will be used in calculating for our consideration. In calculating for our consideration. Very, very simple here. Very, very what? Simple. So that is loan consideration. And share exchange, consideration, share exchange, consideration. Well, so this brings us to the end of purchase consideration. If you've not watched the earlier videos, let me tell you that please try as much as possible to watch them, because we've done cash consideration, deferred consideration. Now, that was the first one, purchase consideration. We've also done contingent consideration, transfer of PPE consideration. And we've also done, and today we are dealing with what? We are dealing with share exchange consideration and loan consideration. Any of this can be present in a scenario or in an exam that you are dealing with. So please grab the concept, right? I say corporate reporting and financial reporting is just about concepts of what you are applying. It's just for consolidation, it's just about the concept of the mechanics. And once you grab those concepts, you should be fine in dealing with whatever you want to deal with. It's the same thing you may face in the corporate world by coming out to work as an accountant or whatever it is. So please, let's try and then gather the knowledge, get the concepts, apply to our exam, come out successful, and then apply it also in the corporate world. Well, here still remains pros and cons accountancy tutorials. My name again remains Edward, and you can call me Ed for short. This is where we will end our session on purchase consideration, consolidation, purchase consideration. By the way, if you watch our video and you need any clarification, anything, you can comment and we are going to reach out to you peacefully. We have someone who is dedicated and myself to help you with all your questions and whatever it is. Our numbers are also there. You can call us and we also reach out to you. We will be happy to hear from you as you watch the video as well. So at this juncture, I will urge you to just subscribe to our page if you find the videos to be interesting, for which I think it is. Just subscribe to our page, like, and then share with family and friends. We will be glad to grow and then also grow with you. This is where I call it a close and I say bye-bye to you all.